Well, folks, what a difference 1 month makes. That's all it takes in the stock market to switch everything around. The market is going full on risk on mode now at this point. I want to show you guys exactly what's going on beneath the surface here in the market here today. Not a lot of people understand that essentially at the end of June and into the beginning of July, traders went all in on shorting the market, okay? And I mean absolutely all in. These folks, man, I'm going to show you the numbers here in just a moment, okay? And we're going to get through all this. I'm going to kind of give my perspective on the market, what's going on here, my opinion. We'll talk about some individual stocks. You know, guys know the drill, okay? We're going to get into it all in this video here today. And yeah, congrats to all, obviously, the longs who have been buying as all, you know, stocks crashed for a while there. So public count here today, $47,000 upward move between all the different accounts. It's a nice six-figure day. For me, these accounts have a long way to go, though. Let's be very clear about that. This account, the public account, that one peaked back in, if I recall, November, and that was over 2 million at the peak. So, you know, although this has been a nice comeback and it's been pretty darn sweet, we got a long way to go here, okay? You know, this account has over $600,000 still to go. My main private account, that one has probably $2 million to go, if not more than $2 million to go to get back to where it was in November. I don't expect my accounts personally to get back to record numbers until probably late 2023 or 2024. That is my personal opinion. That could happen faster. I don't know. But that's just what I think is going to play out. I think in the back half of 2023 or 2024, the public account, my main private account will all hit new record highs. But we'll see. Okay, that's just kind of my prediction on that. Things can happen a lot faster. I remember, you know, in 2020, in March of 2020, I thought it would take a long time for me to get back to record highs in the accounts. Well, you know, 6 months later, we are back at record highs. So, you know, you never know how these things will play out. I just think it's going to be further down the road to get back to record highs, okay? Given kind of everything we got going on out there. You know, I looked at a lot of these positions here today. A lot of beautiful moves up. This is just the public count here. Tesla's over $10,000 move here today. The Chef 9,700, Revolve 5,000. Yeah, just a lot of beauty. And I mean, if you own stocks out there, yeah, you should be doing pretty darn well for yourself. Now, big tech. This is interesting. I was looking at big tech here today. Shopify actually the biggest outperformer, which you should expect in a risk-on market. When people want to take risks, Shop is going to tear it up. And this is what I've been telling people for a while now. It's bottom line. Like, you know, Shop is going to do extraordinarily well in a risk-on market. It does extraordinarily bad in a risk-off market. It's just that sort of stock. It's going to kill everything. It's going to kill Apple. It's going to kill Google. It's going to kill Meta. It's going to kill Amazon. There's going to be nothing that keeps up with Shopify when it's a risk-on market. That's just the bottom line. We've seen that play out time and time again. But the biggest and most important thing on this watch list of big tech here today that I thought was most interesting was this guy, AMD. Now, the reason being is AMD, this one, you know, obviously kind of tanked after hours. I don't want to say tanked after hours. It was just down after hours, a pretty good amount, right? And then, you know, it was down when the market opened, and then boom, shot right back up. That lets you know right off the bat, okay, this market wants to go risk on. When you couldn't get AMD down in any substantial way, that just kind of shows you the sort of market we're in now at this point in time where a stock like that just recovers. And we went through all the AMD numbers, and we went through a ton of company numbers yesterday, essentially. But I just want to show you guys this. Revenue increased 70%, but do keep in mind, a big part of that was Xilinx in that, you know, essentially deal for Xilinx there, so do keep that in mind. But they did say they had growth across all segments, which I thought was important. Diluted earnings per share came in at 27 cents compared to 58 cents, but look at this. Non-GAAP diluted earnings per share came in at $1.05 versus 63 cents a year ago. So keep in mind, because of that Xilinx acquisition, essentially that hurt their profitability here in the short term, but that's going to go away essentially, okay? And they're going to be a profit machine, probably much more profitable than ever before. Also, cash and cash equivalent short-term investments, $6 billion for AMD now. So, you know, their balance sheet's in a pretty darn good place as well. But yeah, when you see the stock react the way AMD stock reacted there, yeah, that means the market wants to take risk on, okay? And yeah, you want to talk about risk on? Look at Coin today. Coin, 19% mover here today. 19% mover. I couldn't really find any huge news on Coin today. supposedly some of the folks that were in trouble that worked for Coin basically said they're not guilty of that whole situation. We'll see what happens with that. But nonetheless, I mean, my gosh, what an absolutely epic move for Coin today. 19%. I mean, if you can make 19% a year, that's good. Like literally, if you make 19% a year, you're doing very well for yourself, okay? Very well for yourself. This stock just went up 19% in a day. They didn't even announce earnings. I mean, that's just an incredible move there. Fintech is ridiculous here today, okay? And I mean absolutely ridiculous. Look at this. The worst stock of fintech here today is PayPal at a 9% move. This is my fintech watch list. That's the worst mover, okay? Now, the hood, we talked about the hood in yesterday's video, and I explained to folks, why is that stock not down huge? You hear 23% layoffs. You saw they've lost 7 million plus customers versus the same time last year, right? Well, like I explained in that video yesterday, right? The hood it's run out of sellers now at this point, right? It's run out of sellers, and also people view the hood as being in a situation where the worst is already behind the company, right? That's what people believe. And in terms of declines in users, declines in numbers, and things like that. Now, also, if you get the stock market to do a little better, that could actually help Hood's numbers in a meaningful way, as well as crypto. If you can get Bitcoin to start going up, Ethereum start going up, that's going to help out Hood's numbers. And ultimately, Hood would go from a situation where they're losing customers to potentially gaining customers at the end of this year, and then that gets rid of this whole, they just keep losing members, right? So all of a sudden, they're gaining again. Revenue starts going up, things like that, right? But look at SoFi. I told you guys, man, SoFi, I've been telling you guys for a few months now. It's not a stock I personally own, but I got to give credit where credit's due. I've been telling you guys, like, SoFi's the real deal Holyfield. Like, I've been looking at their numbers the last couple quarters, been nothing but very impressed. And massive move up here today, 27%. So yeah, just some incredible moves here today in fintech. And it's not just today. This is very important. Look at this, okay? SoFi, just from the lows a couple months ago, this stock is up 68% now at this point in time. Coin, from the lows just back in July or so, this stock is up 70% now at this point in time. If you look at Affirm is usually seen as the most risky of the fintech companies. Affirm is up 114%. That's in a matter of a few months. That's just back in June those lows came, right? And so, my gosh. I mean, you talk about some moves upward, right? Holy smokes, this ain't no joke. It's PayPal. PayPal's not the least risky of fintech by a mile. By a mile, okay? It's not even close. And even this stock, since July 14th, essentially, so it hasn't even been a month, this stock has gone up over 40%, right? But the thing that's important to remember with all these fintechs is these stocks had been obliterated. Everybody threw them out like the companies didn't matter anymore or something like that, right? And so they were due for a comeback. Eventually what happens with stocks is they just get way either overbought or oversold at particular times. In fintech, in the hype cycle of 2021, right? When everything was kind of at peak, they got way overbought. Every single one of those stocks got massively overbought, and they were due for a huge correction, crash, whatever you want to call it, okay? But the problem was everybody overplayed their hand, and they all got oversold. Every single one of those stocks got oversold. I mean, PayPal was down to $60-something at one point in time. That's just ridiculous. Like, every single one of those stocks got massively oversold, and so, if you've been picking up shares of those stocks in, April, May, June, oh my gosh. I mean, the profits you're sitting on at this point in time are just, let's just call it off the charts, okay? Just insane profits. Now, leverage ETFs. This came out from early July. Leverage ETFs betting against U.S. stocks drawn $1.4 billion. Short S&P fund sees 12 days of inflows. NASDAQ racks 4. So basically what happened here essentially is the market, obviously in the front half of each year, it was one of the worst, if not the worst, first 6 months of a year in the history of the stock market. Think about that for a moment. In the history of the stock market, like one of the worst years ever, okay? And so everybody saw stocks just continue to go down and down and down, right? And got so caught up into the negativity and just believing that only stocks go down that they started to load up betting against the market, shorting stocks, going into these leveraged short ETFs and things like that, right? And they went just super heavy, like billions and billions of dollars poured into these things because everybody just started believing like, oh, stocks only go down. Stocks only go down. I mean, look at the NASDAQ at one point was down 34% from its highs. The S&P 500 was down 20-something%. The Russell was down 34% from its highs at one point. And so everybody caught up into this hysteria of stocks only go down. You got to short stocks to make money, right? They got caught up into this as people got caught up into the FOMO cycle of late 2020 and into early 2021 about stocks only go up. People got caught up into this, and these traders have absolutely gotten devastated, okay? It's ridiculous. Look at the past 1 month for the NASDAQ. In 1 month, the NASDAQ has gone up over 15%. I don't know if I've ever seen the NASDAQ go up 15% in 1 month. That's a ridiculous move. If the NASDAQ goes up 15% in a year, that's a great year. Like, if you told me the NASDAQ could go up 15% every year, I would take that any day of the week. I would say, okay, that's fine. For the rest of my life, if the NASDAQ goes up 15%, I'll take it. That's fine with me, okay? But that's not the reality. And so for the NASDAQ to make a 15% move in a month, I mean, it's incredible, because there you were in a moment at the end of June, right, and into July, when people were just max shorting and short, right? Look at this. The S&P 500, the S&P flipping flapjacking 500, which you should usually know goes up like 7 to 8% on average per year, is up almost 11% in the past 1 month. You can't make this stuff up. And oh man, it's what happens in the stock market. Like, people get caught so far off sides. They get so caught up into the negativity, or they get so caught up into the FOMO, depending upon what market you're in, that they just completely lose themselves, and they bet so dang heavily. And here's the thing for traders, because a lot of times it's traders that are doing some of this stuff, okay? Not really investors. Like, no one's going short the NASDAQ or short the market for the next 5 years. That's not the way people play, right? People are usually doing that because they believe over the next few weeks or over the next month or so, like, the market was going to go down. And it went anything but down. It went up in almost a straight line, with the NASDAQ up 15% plus in the past 1 month. So everybody that went short the market, and remember, the people that went at like 2x leverage into those short positions, those people could have lost 20, 30% plus of their money now at this point in time, right? And so what likely happens is some of those folks have now covered, right? Because they got absolutely obliterated, so they ended up covering their positions. And some might try to ride it out. But if you know one thing about trading, because there's a big difference between an investor and a trader. Traders don't ever want to turn a trade into an investment, okay? And so you can't like double down. Like, if an investor loses 15% on a stock, let's say their stock price goes down 15%, or let's say it's 30%, whatever, right? An investor looks at that and they say, okay, I'm going to buy some more shares, okay? I'm going to load the boat. I'm going to keep buying shares. I love the stock. I believe it's going to go up over the coming years, right? A trader, if they lose 15, 30%, like, they're done. Like, that's it. There's no like, let's turn that into like one of the number one rules of trading in the stock market for traders is you never make a trade into a long-term investment. Ask anybody that knows anything about trading, anybody that's ever been successful in trading, like, and there's not that many, but the ones that have been successful in trading, ask them. Like, you don't turn a short-term trade into a long-term deal. That's it. If you got it wrong, right? You got it wrong, and the 2 weeks went by and you got obliterated. Like, you got to move on from that, right? So now we're at this point in time, and it's just so funny because it reminds me of this you ever seen this picture before where they try to fit I think they set like the Guinness Book of World Records for the most people in a smart car or something like that. What we see consistently in the market is traders, when the market goes one way, they just continue to think it's going to continue to go that way, and they pile in, and I mean, it's just absolutely crazy. You look at what happened with, obviously, Cathie Wood in 2021, right? Look at the inflows ARK had at the peak, right? It was ridiculous because everybody was so caught up in this hysteria, this FOMO of like only going to go up to the moon. And, look at the inflows that ARK had at that time. It was ridiculous. Like, they didn't know what to do with all the money. They had so much money inflowing at ARK. It was ridiculous, right? And by the way, that was setting up ARK where they had to invest that money at very bad prices into a lot of stocks that are already overvalued. So that set them up in a dramatic situation, right? But this is what traders do. And this is what some people do. They flood in money to something because it's the hot thing and it's been working so good. So why shouldn't it work now, right? And then everybody gets negative, the market goes down massively, and then all of a sudden it's like, hey, we need to pile on the shorts, go all in these ETFs that are short the market, 2x leverage, 3x leverage, 4x leverage if we can find it. We'll do whatever it takes, right, to get absolutely devastated, okay? And there's no coming back from that, right? you can try to like re-short. And so this is like the predicament now some of these traders are in. They're like walking a tightrope, right? Where they're trying to figure out, okay, do I go long the market now? Or are we going to get back into a cycle, a bull cycle, right? Or do I try to re-short? Or do I just stay cash? And to be quite honest, it's very difficult. I think if you're trying to trade this market right now, very difficult. I wouldn't know what way to go. Okay, and this is why I don't do trading. I don't know what way to go because I can see a scenario where we go back down as far as the indexes go, right? Let's say there's more recession fears. Let's say some sort of mass job layoffs or something like that. Maybe we go back down. I can see a scenario like that. We haven't seen that scenario happen yet, but it doesn't mean it can't happen. As far as upside goes, well, we've already had a pretty darn big move here, right? 15% in the NASDAQ, over 15% in the past 1 month. It's a pretty darn epic move. So can we get more? Sure. We're still way off of the highs. We know that. There's a long way to go before we get back up. But when you have that big of a move, usually you're going to get some sort of pullback and kind of like chill out period, right? And then I can see the other side where it's just like kind of hold cash, right? And just like, I don't know if we're going back down on the market or long the market, but just kind of cash up. And so I kind of see all those scenarios. I think traders are going to be very confused on what the heck to do for the next, I would call a month or two, because they've just completely gotten this thing wrong, essentially. They went, way crazy FOMO in the FOMO market. Now they went way crazy shorting like insanity, when everything was primed for a massive comeback. And now they're just stuck in a really, really hard predicament, walking this tightrope. And that's why I'm glad I'm not a trader, man. I make my long-term investments. If they go down, I buy more shares. And load it up, throw them in the filing cabinet. And someday I'll worry about selling those stocks whenever, right? But the whole trading thing is difficult, right? And in terms of the market, I don't want to go through all these because I talked about this in a video a few days ago for those of you guys that saw this. But, this is a wall of worry. And for the wall of worry, it doesn't seem like it's getting worse for any of those now at this point in time. If anything, it's a situation that's getting better. And therefore, the wall of worry is at kind of a difficult proposition now at this point in time. Okay. Now, we have some absolutely phenomenally great news. And I mean, this is great news for the stock market. This is great news for some companies' earnings. This is great news for the economy on many different fronts, okay? I want to start out here looking at oat futures. Oat futures down again today, huge. It's been down anywhere from 4 to 5%. Just in the past 3 months, oats have gone down 39%. Now, for those of you that might own Oatly stock or are thinking about owning Oatly stock, this is great news. Oatly has gotten absolutely obliterated with oat costs because basically what happened starting in the summer of 2021 through about May of 2022, oat prices went to the moon, okay? And that's not good if you're in a business where your main ingredient other than water is oats, right? And so that just put them in a really hard predicament along with all the other inflation pressures they had to deal with. Well, things are going to get better and better and better here on in that situation. And so that's definitely very good news. And, this is the type of thing you want to see. You want to see commodities start to go down and down and down. Lumber. Look at the price of lumber. This is just in the past 3 months. Lumber has gone down 58% in the past 3 months. More good news, okay? We want to see these things continue going on. They went on these incredible bullish runs that just aren't realistic. This isn't freaking Tesla stock. Like, there's no reason lumber should go up, 100% plus in a year. That's just not realistic, right? But that's what happened. That's what happened in the end to a lot of these commodities. They went absolutely insane. WTI in the past 1 month has gone down about 16.5%. We need to see that continue. Now we're in August now at this point in time. The revenge travel summer's over. I think it's hard to be bullish on oil price going into fall time and then winter time, right? And so, usually if people get excited about oil, it's kind of in the springtime as you get into summer and it's like, peak travel season and all that, right? And you kind of get everything working together. Well, that peak travel season is coming to a close. School's about to start again. And, that's a whole, I would just call it pickle for the price of oil, which is good for everybody in the economy because at the end of the day, this just steals people's money from people's pockets. If they can't spend that money, if they have to spend that money, let's say at the gas pump, right, and you got to spend $100 to fill up your car instead of $50 like it used to be or $70, right? It's $30, $50, whatever. You have less to spend other places or invest in the stock market or whatever, right? So I think that's very, very important that the price of oil is going down. This is overall Commodity Index Trust Fund, if you want to keep this on your watch list, I think it's a good thing to keep up there, GSG. This is down 17% just since June 8th. And so commodities as a whole are going down. This is good news. And the ones that are most important are things like wheat, things like oil, things like natural gas, and things like that, guys. So definitely some progress being made there. Now, we're not out of the clear yet. To be very clear about the state of the economy, the state of earnings, things like that. We do have to remember, we're still in a technical recession right now, right? We'll see if it gets worse. That remains to be seen, right? We've seen, obviously, layoffs at a lot of these tech companies. I mean, look, layoffs were non-existent up until all the problems in the stock market started to happen in the capital markets, and then all of a sudden, next thing you know, layoffs left and right, right? We're going to see what happens there. The August numbers should be interesting to see if those go to a new record or if those chill back a bit. From what I hear, the PE space, private equity, is in a little better spot than it was a few months ago, but it's not necessarily, like booming. Let's just put it that way. That's from what I hear, okay? Now, job openings is something that's always very discussed out there. We've seen the amount of job openings across the board kind of slow a bit here, especially in the tech sector. And by the way, this is a pretty cool website. It's like trueup.io, and it's like free access to the stuff. But I'm watching these numbers of job openings kind of go down, but I think they're probably even down more than what the numbers show, in my personal opinion. I think, because think about it, like not every company's, if a company's not really hiring for positions, it's not like they remove that position that they put out there to the internet, right? It's not like they do that right away. Sometimes it takes weeks or months for you to take down this this position you had in this application, right? It's like, I don't know any company that, like, as soon as they aren't looking to hire a position, they take that down immediately. Like, usually it takes weeks or sometimes months to, like, take that position down. So I actually think there's far less real job openings than what the numbers show based upon these different things. Let's just put it that way, and the numbers the government gives you as well, okay? Now, in this sort of market, I think using the strategy GVD 123 is very important. If you never saw this video, I produce so much content that some of these, in my opinion, classic videos get completely buried on the channel. But if you never got to check out that video, just type into YouTube GVD123 and check out that video. I think it's very important. It goes into exactly kind of how I run portfolios with growth stocks, value stocks, dividend stocks, and using a 1-2-3 strategy for that kind of goes in depth, and that's something no one else does out there. So I just think that's an important video that could help you guys out in this sort of market, and I hope you enjoy that if you never got to see that classic there, okay? If you're looking to join me in the private stock group and learn how to value stocks so you know if it's overvalued, undervalued, or fairly valued, if you want to understand financial statements like a CPA would, if you want to get access to my dividend investing mastery course, my becoming master of the stock market course, my Thriving in a Recession course, plus all my other courses. And if you want to get access to the private Discord chat to connect with myself and all the 6- and 7-figure members and things like that, then check out the pinned comment down there and apply to join us in the private stock group. Much love as always, and have a great day.